So, welcome everyone. Welcome to this weekly lesson. We're back with the weekly lessons here in Teach Trade for free lessons, providing free access, opportunity, and resources to the community. All right. Today, we're going to cover some of the essential indicators that we think are the highlight of trading. We think can absolutely improve your trading regimen, your trading applications, as well as your execution. These are going to span a range of different use cases as well as where they fit into your trading system. Some of these are going to be mainly just informational, others are going to be more applied, and some others may involve in terms of how you manage your entries and exits as well. Okay, so this is what we're going to cover here in today's lesson. So let me see the ones if you're ready to get into this today, and we'll be on our way. So, what makes a good indicator? The first thing that we need to understand is that simplicity is key. When it comes to trading indicators, as we populate our charts with information, we have to make sure that it is easy to read and easy to understand. Okay? An indicator should never be something that complicates things for you. It should put things into better perspective. You may have found yourself when looking for indicators and trying different ones out that you may put an indicator on your chart and then really don't understand that. Let me know if you've had that experience where you don't fully understand it, you don't use it often, and it's just taking up space, taking up real estate on your chart. For those of us who use TradingView, which is a free platform, on the free plan, you really only get two indicators. It used to be three. So TradingView is a couple of freeloaders, unfortunately. But right now, a lot of us are on premium plans. They offer huge discounts during major holidays. And so you get more slots with indicators, right? But there's ways in which you can trade with just a few. And there's ways in which more definitely opens up if it fits into your trading system. But at the end of the day, it has to be simple. It has to be relevant. Okay. What an indicator should do, in my opinion, most of the time, an indicator should not be your strategy. Most of the time, I'd say 95% of the time, an indicator is not going to replace your strategy. Okay. It should be something that is a supplement, something that supports the foundation of what you have, right? So there are some of us who have different trading styles. Some of us trade RSI MACD. Some of us trade the strat. Some of us trade smart money concepts or ICT. And there are a few different trading systems, right? And not every indicator is going to properly be relevant to what your trading system is. Okay. We're going to be covering a lot that are very versatile. And that leads us to number three, adaptability. You know, that it's able, some of the greatest indicators are the ones that are useful in multiple contexts. There are times where, as we just said, to relevance, that they are relevant to multiple types of trading strategies, right? And that is what we really want to see. That there are some indicators that can be very niche, very specific to something. Let's say like a scalping strategy or a day trading strategy. Who here uses the range rush reversal? Not to get ahead of ourselves, but who here uses the range rush reversal, which is one of our tools that we provide here for free and Teach Trade? And so the range rush reversal is a day trading indicator, right? It's exclusively a day trading indicator, which means that if you are a swing trader, it is not as adaptable to your trading strategy as much as something else maybe. And we're going to cover an indicator that does very much fit into swing trading. So definitely be on the lookout for that. But those are some of those things, you know, it has to be relevant, it has to be adaptable. But it also, as is very important, we try to utilize, and why sometimes people get into that practice of having multiple indicators is the ability to minimize false signals, right? To have as much confluence as possible to say that this is giving us more information to help us confirm that a stock is going in a certain direction, right? And that's where a combination of these indicators can come into play very well as well. But it's not about how many indicators you have. It's about the indicators that fulfill these 4 different areas. All right? You understand that? And so, for our very first indicator, the economic calendar. Okay? So this indicator is called Live Economic Calendar by 2 degrees. Is this anyone's first time seeing this indicator? Press 1 if this is your first time seeing this. So what this is an indicator that gives a complete overview of all of the economic events that are happening in a trading week. All right? What I would say is that at the moment, this is one of the most crucial and most important indicators that I use on a daily basis, right? I don't start a trading day unless I've seen this first, okay? What this does, and it's a very incredible how they were able to accomplish it, but it pulls data directly from Forex Factory, which is a website that details what the economic events are on each given week. I used to use marketwatch.com often for that. But the thing is that when we have our trading regimen, at times, and I'm not sure if other people have felt this, it can feel as though your regimen takes place across multiple websites, right? Has anyone felt that before? And at times it can feel like, I know sometimes I would forget, or that it would just become an extra step to have to navigate to the website or have it pinned as a tab on my browser, have to check the thing, you know, check the events or check the news, and then having to come back to TradingView. The main benefit of this is that this gives it all within TradingView, so you have it all in one platform, okay? What it does, it gives updates on when the Fed members are speaking, when the president is speaking, when inflation data and interest rates are released. So we know that like the FOMC minutes or FOMC meeting actually, the CPI data, which is the inflation data that was I believe last week or the week before. You can see that at least on this screenshot on the screen, it showed that Powell spoke on Monday, and we saw that, you know, the market pulled back after he started speaking. So these things tend to line up. What's super important is that with this data, you don't get caught off guard by sudden movements in the market, okay? There is oftentimes on every single trading week, there's at least one day where there's data at 9:45 a.m. on a certain day or 10 a.m. EST on a certain day. And so when you're trading and then you enter a trade, if you enter a trade not knowing that event was there, you might get hit with a reversal because the data gets released, the market reacts to the data, and as such, you just want to make sure you're not on the wrong side of the trade at that time of day. All right. So this is crucial. This is as crucial as knowing when a stock's earnings is coming up. This is more important than that, actually. And so this is something that I do believe, especially for our newer traders, this is something that you may have not been taught as your regimen, as your process for how you approach every single trading day. You may have not been taught that yet, but we're here to bring this information to you and make sure that you are practicing it properly. All right. So what I'm going to do is I'm going to pull up TradingView here if I can on my screen. Let me know if you can see. And what I'll do is I click on indicators. Let me see if I can zoom in, make this bigger, text. And I can type in live economic calendar. So all I did was click indicators, go to the search box, type live econ, and then it just pulls this up automatically, all right? So when I click on this, here it gives everything that we need to know. What you may have just seen is that what are these lines? What these lines are the day for a specific event that's happening soon. So, and it tells you how big the impact of the event is. And I think that's lovely. I actually forgot, I forget about that part because I typically just focus on what's happening. But if you're, and I'm used to how impactful these events are, but this is helpful, especially for our newer traders, where you can see the severity of a certain event. So we know that Powell, when the Fed chair speaks, that's a high impact event. And we saw that once he spoke yesterday, the market dumped, right? After he started speaking. And, some of these others are lower impact, but here on Thursday, we're going to get a big impact event. And that's going to happen pre-market at 8:30 EST. Okay, unemployment claims. All right. But what it populates on the side, these are the events that are coming up. So this is an orange line. I think that orange line is saying that's the day from the building permits. I think that's the building permits info. Let's go over to SPY. And then what this, what you may see as this, these bubbles that are on the chart, if you hover over one, I was just doing it for me. I don't know why it's not now. If you hover over one, it tells you. See? So so everyone sees that on the left side of the screen. When I hovered over here, it literally lined up, right? Fed Powell speaks. You see that event happened in the past. The bubbles show you that it happened already. And that on that candle, during that time, market dumped, pulled back, sold off the end of the day. We had some housing market index numbers and business inventories numbers come out at 10 a.m. I believe this is today. That pulled the market back for a moment, right? It looks like we ended up reversing. But that's showing you the impact of some of these events. And that these vertical lines are what's soon to come. So this doesn't always, what's great and another good quality of an indicator is its customizability so that you're able to make it more adaptable and more relevant to your trading strategy, right? So you're able to sort of customize some of the colors. You can show just specific data. You can actually go and make this only to show today's events. It might take a moment to update. Oh, I think it says news on chart. So if I clicking that thing, it only shows today's, so it won't show something in the future. So that's pretty cool, and you don't always have to have this. I know this is pretty big, so you can always just minimize it or just have it so it doesn't show the big thing. But I have it such that I have actually a chart layout that is solely dedicated to this. Okay, I'm going to attempt to try to show you all that right now. Okay, so this is gonna look a little crazy. My apologies. But this is my chart layout. So I don't watch charts or like price movements on this chart at all. And you're all able to see my screen. I don't watch the charts. What I simply do is that this is my pre-market prep for the stock market, right? And so I'm jumping ahead of myself here, right, with some of these other indicators. But I look at the pre-market, the economic calendar, and then I'm checking a bunch of autostratic indicators, which is the indicator well, the tool set of indicators that we built. And I'm just looking at what the scans are all across. So like I see, you know, Apple, Tesla popping up over here. You know, I might be trying to look for names that are popping up over and over in the same place. So I see like Shopify's on a bullish kicking pattern radar, but I also see it's on the outside week up radar. So that's two things that might say, okay, this is very bullish. Let me consider that. That's just an example. But I'm jumping ahead, and don't look at this and get overwhelmed or anything. But you can get very creative in how you set up your charts so that you have specific charts dedicated to just information, and that you don't even need to look at the stock movement on something, and that some of your indicators don't have to be on your regular charts all the time, if that makes sense. Everyone's good? Is this helpful? I promise you that indicator is like a savior. I'm so happy for that developer because he really pulled off the impossible. So the next indicator we're going to cover is relative volume. So this is way better than regular volume. Okay. So this is volume plus. The name of this indicator is volume plus rvol/alerts. When it comes to I'm sure some of the Academy members, you all may be familiar with this already, or if you've read my book. I'm going to sort of teach a few things and get in a few demonstrations here about it though. So volume plus, why is this better than regular volume? Well, it points out exactly what we need to know, right? It points out where is the highest volume. Most of the time when you see a volume indicator on your chart, it only highlights green or red. And you might think, oh, this is the buying pressure or the selling pressure because the volume candle is green versus the volume candle is red. And so one thing about that though, it's not necessarily accurate, right? Because you can have a candle that's just in the middle, like a doji, where there's equal amounts of buying and selling, but because of where it closes, it may be like a red candle, but there was still equal amounts of buying and selling. But that because that red candle happened, it would show red on the volume. So that doesn't necessarily mean that there's selling pressure, right? What I think is more valuable of information is how much volume is coming in such that it is higher than average. For any Academy members, what did we learn about volume? Why is volume important? It's the amount of transactions happening in a period of time, right? But we think of volume because it's needed to move the stock, right? I also like that, to confirm a breakout, right? And that's also what we're going to be one of the use cases here. But it's like with volume, it's like moving furniture. With a stock, uh, most of the time, at least let's say if we're just all a bunch of retail traders, if it's just one retail trader trading a stock, I mean, they could be a millionaire and just drop a bag and that moves it, right? But if you're just a drop in the water, you're not really moving any waves, right? You're trying to lift and put furniture in your apartment. It's going to be a harder task. But if you get more people involved and a lot more transactions, that actually determines a move of the stock, right? And so it can tell us a lot of things when we see volume above average about very important points in a chart period. Okay, so how to read it is that this, when volume, irregular volume and like an average volume would just be highlighted gray. But if the volume is higher than average, if it crosses above this pink line, then it highlights green, right? Then that shows that the volume spiked above the threshold. Okay, so green does not mean buying. Okay, green means that this is important volume, and that could be buying or selling. And so typically, one use case I use is that if I'm on the 5-minute or 15-minute time frame and I see volume spikes back to back like this, like 2 or 3 times in a row, I tend to think that the stock is going to make an aggressive move throughout the entirety of the morning. Okay, is there any ticker maybe that we can use or think of as an example of this, that this may have happened? What's something that just absolutely left the stratosphere? There is Caterpillar for sure, but I want to maybe make sure Caterpillar is a good example. You said CCL shop. Okay, I think okay, that's okay. Thank you. CCL, that's actually a great example here. So what I did is I just went to the indicators tab. I typed in RVol, but the one that we like the most is the one by Zen and the Art. Okay, volume plus RVol/alerts. So I think if you search volume plus as well, that will pull it up. And so CCL has multiple examples, as we can see here. So we had this one trading day, right? This was the end on Friday. This was the end of Friday. And I'm just going forward here. Just going forward. And then this was the last 10 minutes of market open. So number one, what you can expect on the R volume indicator is that you can expect that there are going to be spikes a lot of the time in the first 30 minutes or the last 10 minutes of market open. Somebody very quickly tell me why. Why do we know that? What have we learned from Teach Trade? Why is there going to be an R volume spike here at these times? Definitely power hour, right? And a lot of buying and selling happens during these points, right? Yeah, the most activity. I had posted earlier today about how the first 30 minutes of market open is such a great time to take profit. And we should know that because the increased volume and volatility and what that does to the options contracts, right? And keep that in mind as we move forward. And so now we start a new trading day on CCL. We got our volume spike as we expected on the first candle. And then on the second candle, there was another spike. Back-to-back spikes here. And so, interestingly enough, with this, there's times where this is informing me that this can sell off for the entirety of the day if the first candles are very aggressive and the volume is just as aggressive, okay? So this could at times signal that, hey, this is falling aggressively. This can fall much further. And let's see what CCL did. It dropped pretty hard, right? It dropped the entirety of the morning, the first 30 or 40 minutes. And that was that. Other things that, and so we're going to see one more into the next day, because it actually dumped pretty crazy. It started rising. We'll just keep moving forward here. We had a huge spike, a huge volume spike. What else we can use this is just to compare the volume relative to the previous days, right? Some days are higher than others. But this at the end, when it started going up, that was much higher than the volume when it dumped, which is interesting to me. Then the next day, back-to-back volume spikes, and look, it ran all the way up. And some people made a bag off of CCL this morning. So this is telling us the relevant information, right? Where the volumes, when the volume spikes are happening, when that is relevant to us, okay? Another use case, if you read this slide, that price may be hitting a range of open orders, or that news came out affecting the stock, all right? So let's see if I can, what's something that hit a resistance lately? I'm going to see something that maybe that either hit a resistance or hit support. It said Snapchat. So, and what I'm looking for is something very specific. Okay, I may not be able to see this example if we're not able to find it. Okay. So, but what I want to, maybe even Rocket had hit a resistance at one point earlier today. I'm going to try one more time with SPY. My apologies, everyone. Or futures, rather. So, okay. No, these aren't really great examples. But essentially what I wanted to point out is when a stock goes through and runs through a previous high or low, we tend to see volume spikes in that area. Maybe it's easier to see on the 15. Oh, okay. Maybe that could be something there. So when SPY, when it was doing this movement back here, we had this, we had a high, right? Then when we ran into this previous high back here, the volume at that moment, if you see this slanted blue area, it started increasing at this very moment, the average volume on the 15-minute, and it crossed above threshold. And so typically when I'm trading a stock, and let's say I'm in calls, if I'm trading a stock and I'm in calls, let's say I entered calls right here. If a stock is going up and then it runs into a previous resistance or a high, if I see the volume spike above that, I'm typically taking profit or trying to look for an exit. Why is that? Because for some people who know, at these resistance points, there are open orders, right? There are open orders that are situated right above where previous highs, swing highs are. And so when we run into these orders, whether they are stops or additional sell orders, that can drive the price aggressively, but then lead to a reversal soon after. Okay? The benefit for us is that anytime we're in a trade and it's going in our direction, and then there's a huge volume spike in the direction of our trade as it's going, what does that do to our options? Increased volume means increased volatility. Increased volatility means that it pumps up the value of the options contract. So you may have seen that when you're in a contract and then you run through an important level, you might see your contract just spike. Has anyone seen that or had that experience? You may see it spike up and then it's just like, wow, it was going smoothly and then it just jumps. But then soon after, the stock might reverse. And so in that point of time, when you have the volume spike, that is your preferred exit, because you get that pump up on your contract and you're trying to get out while the stock is in momentum. You don't want to sell contracts. Let's say if you're in a call, you don't want to sell a call on a red candle, because then you're trying to chase a bid price that keeps trying to get lower, because the sellers are trying to get a bargain for their deal, or rather the buyers are trying to get a bargain for their deal if you're trying to sell and close out of your position, right? So you want to be able to get out when the momentum is happening and anticipate before a reversal comes. Does that make sense, family? Now, the very last use case is if news happens. And unfortunately, I don't know any current news that may have dropped like midday of any stock really. But let's say I'm on GameStop because it's relevant, right? You see on GameStop randomly on Friday, and it seems like recently as well, even today, randomly on Friday at 11:50, we got a random spike of volume candle here, right? So, what does that tell us? Well, we would be looking through either one of these three things. It's either that the stock is just simply highly active in this period. It may be hitting a range of open orders like support or resistance. Or one thing I forgot to mention here on this slide is that it could be just a big buyer, like a huge whale just dropped a position. That is also possible, and that can draw our attention to it as well. Or it can be news that came out that is affecting the stock, right? And so I don't know what this volume spike down here is about, but I can quickly and easily make an assumption about what it is about without knowing it, right? So if I see a random volume spike on any stock, I'm going to go investigate it. I'm going to go through maybe the news tab here on TradingView. I might go on Twitter, search the ticker up, see, did anything happen? Did something go on? Did Roaring Kitty sell his position? Did he say he's buying more? That's kind of those things that are that's what the chart is telling you. Because if you remember with indicators, with these charts, technical analysis, all this that we're doing, it's a language. And we are trying to figure out what is being communicated here. So if we know how to understand and speak the language, can we interact and engage with it? All right. My R volume, these are the settings. They are the default. So it's 50/50 EMA 2.5. Okay. 50/50 EMA 2.5. So I believe they're the default settings. Everyone's all good? We ready for the next one? So this one is certainly very useful for especially newer charters. Uh, is there anyone here who's still learning how to chart, by the way? I think we're all still learning. Charting is a never-ending process, by the way. So don't feel like, hey, I've mastered everything. You didn't. Because you can only be a student of the game, right? So use this information as stepping stones, because you can do it, and if you're not there yet, you will get to a point where you are comfortable with charting. And I'm sure so many of you are surprised by how much you understand from how scary it probably seemed at a certain point. So pivot high and low, this displays all of the swing lows and swing highs on a chart. Don't get too caught up on the word swing. All that means is when we have what looks like a valley and a hill, right? When price goes one way and reverses. Price goes one way and reverses. So this is showing you the tippy top and tippy bottom of these reversal points, okay? Why are these points important for us? Well, these are the main points where we a bit covered that where those open orders are, right? Or where important levels of support and resistance are located, right? So if I go to indicators and I search pivot high low, so search pivot high low, and this will give that to you, okay? It populates on the chart, and we're ready to go, okay? So you see, we're on a really small time frame here, right? But you see that this simply, very simply, like notes it on your chart about where some of those highs and lows are. And we're on a small time frame. But look at this, the red arrow to show where swing highs are. The green arrow, where the lows. So these up here are possible points of resistance, where if we hit that, we could pull back, right? So it easily identifies it on our chart so that we know what to expect if we go past this point. So here on GameStop, we eventually ran into this area, right? This high that was untested, we did not hit it before, right? What happened after? We had just a bit of a pullback, right? This can be a bit more significant on higher time frames as well, but that's like the first part of what we're looking at, right? What the other part, and hopefully I can find a good example of this. I see an example here on the smaller time frame, but I want to see a bigger example. But another part is that understand this. An uptrend is determined by what? Higher highs and higher lows, right? What does that look like in action for those who may have not charted before, right? So for people who are newer, I'm gonna draw two vertical lines, right? From this point to this point, right? What is price doing? Very simple. This is a one-word answer or two-word answer. What is price doing between this line on the left to this line on the right? An uptrend, right? It's going up, right? Simple. That was a simple answer, right? And so how do we know that it's going up? Other than we can see it, right? The confirmation that it's going up is if we see some of these highs. So some of the, let's say the red triangles, right? Some of these highs getting higher than the ones to the previous, right? Because this red triangle, as time moves forward, this red triangle is higher than that other one, right? Same with the bottom. We have a green triangle. And then this one over here is higher than that one, right? And so, by definition, that's an uptrend. Simple, right? And as simple as that can be, that can literally determine how you trade. And that's your whole trading strategy. And some people in this trading group can tell you that that is simply what they use to trade everything, by just understanding, are we making a higher high? Are we making a higher low? That's an uptrend. Are we making lower highs? Are we making lower lows? That's a downtrend. Okay, now that I know that, how do I know when the trend is changing? That's important. Y'all understanding what I'm saying, especially newer traders? So what this indicator then is pointing out very simply is exactly that. You can use this to see where are these important levels at. And you can literally say, hey, the red triangles are getting higher. That means to me that we're trying to move in an uptrend, right? Oh, the green are getting lower. We might form a downtrend. And you can use this on any time frame, right? Look back here. This is still GameStop, I assume, right? Even though this is not labeled here, right? We were still, but you see the red triangles are getting lower, right? We can even connect those dots to say we're moving in the downtrend, right? And eventually we had a lower green. So it's super important, especially with drawing trend lines. And that's like in a thing that is part of our 30-day challenge as well. That this indicator just helps you a lot with identifying where to draw from and what's important levels if we hit it or not. Let me see one more. Let's see what had a crazy reversal recently. I mean, Roku definitely did. What was it that we had charted? Was that IonQ? Yeah, right. Okay, so I have some drawings here already. But if you follow my mouse, we had this important level back here. And so we know that this is a possible support. And that price was moving in a downtrend initially, right? Because we had lower highs and lower lows. But once we hit the very last green arrow, this very last low, that was a significant support, such that we hit that support and then started bouncing after. What you might be able to find on a different time frame is that after we hit that low and then we started bouncing and started getting back above that low, we started making higher lows where this was in a downtrend once before, but then we start forming a bit of an uptrend. So that's how you can start utilizing this in an interesting fashion, where identifying where your support and resistance is, and then clearly identifying a trend so that you are trading with it and not trading against it. Okay. Everyone understand? Maybe I should play rate the indicator in terms of how you're feeling about each one. I'm gonna step back just for a quick thing. So economic indicator, out of 10, what are we giving this? Very quick so we can move forward. We're giving the 9, a 6. I give it a 10 because I use it every day. A 9.2. For relative volume, in terms of how we're feeling about it and what we understand, what are we giving that? 10. Wow, 10 million. You said 10, you use it? All right, 9, 3. Damn, king. And then now the pivot highs for what we just explained, the use case. I would expect this one at 11, 6. One. All right. Now we move on to time frame continuity. One a lot of you are familiar with. So there's several indicators that fulfill this one. The one we're going to talk about is literally named time frame continuity. And we're going to check this out, okay? So what's a ticker? I'm going to maybe look at Boeing. But time frame continuity. Is there anyone who has never heard of this before? And I'm going to share links to all these as well if you need them. You said this is the one that you really have trouble understanding. Okay. So I'm glad you're here then. So with time frame continuity, right? So what it is, it's a concept that I'm not sure if Rob invented. Rob Smith is the inventor of the strat, which this derives from. But it's used in many different scenarios, right? I'd say that this is the most adaptable indicator to just about every trading strategy, I would say. So what this is that it is about utilizing multiple time frames in order to showcase the momentum of a stock, right? So it's as simple as that. So let's say that, as if we read here at the bottom, right? Let's say that when you see a stock, the daily time frame is green, which means that this current time period between the start of a trading day to the end of the trading day, that is green, the stock is positive, it's moving up, right? For the most part. Let's say the week is that as well, that currently in this trading week, we are green. We are above where we opened. Prices moving up. Let's then say the month is also green. So that a stock, let's say in July, that it's been moving a lot and it's been pretty green, right? So what is that telling us about the momentum of a stock during that time? If we see these time frames all the same color and all moving in the same direction, that's telling us that the momentum of the stock is very bullish, right? So think about it like that logically. When you take a trade for calls, would you want there to be red time frames? There might be red time frames, but let's just say, would you want it? Would you want there to be red time frames that could be such that there's still a certain amount of selling pressure or momentum that is going against your trade? You may not want that, right? You would want stocks that have momentum that is displaying that buying momentum is there, okay? So what is this telling us? The more time frames that are moving in the same direction that you are trading in, the higher the probability of the trade working out. And I have some great examples to show and display when there's great time frame continuity and when there's trash, basura, time frame continuity, okay? Because if the time frames are conflicting, that means there's a lower probability trade. The more you have, the higher the probability of the trade working out. So to all of my autostratic people who have been using autostratic or using the strat score, the score is highly affected by how many time frames are in consistency, right? And when you have more, that means it's a higher probability trade. Strat score is determined by a lot of things. That's one of our indicators if you didn't know. It's determined by a lot of things, but time frame continuity is one of them. So one indicator that you can use is this one, literally titled time frame continuity. I'm going to drop the link here. This is not the one I developed. I'll put mine on here as well. But I'm going to showcase both. Sometimes TradingView has been glitching a little bit lately. So that's just, something I've been dealing with trying to develop, code some of my indicators. So we're just going to use this one. So let's see about when the day that we opened this month. Oh, okay. So check this out. This is interesting. So every single time we start a new time period, that just means a new refresh of time frame continuity. Okay. So at this point, this is July 1st. So we start a new month, a new quarter, a new week, and a new day on this day. So we started a new month, week, and day, right? So at first, when CCL, this is Carnival Corporation, when it started, it's funny. Let's compare it to before. Before July, CCL was going, right? It was popping, right? And why? Because it was above the monthly open. This is June here, right? This is the start of June back here, and then to the right is the start of July. So throughout June, we started very green, and then we kind of got a little iffy in here because we got iffy because some of the days were green, the week was red, the month was green, right? If we were above where the month was, the month is green. But on some days, if we have a red day or a red week, that is when the time frame continuity is not continuous, right? That means that the time frames are not all green. They're not all red. Some of them are green, some of them are red. We know how it is when, you get into an argument with your partner in the car, you're not on the same page. You're not on the same page, which means you're not getting anywhere, right? And only if you're on the same page are you getting somewhere. So think about the market as a healthy relationship. You want to have a healthy relationship with the market, you have time frames that are having a good relationship with each other, dapping each other up, hugging each other, and saying, okay, brother, we're going in the same direction and we're the same color. We're repping the same set. Okay? I'm sorry. But we have analogies for days to get this point across, right? And so when on so this was very green because all things were green. Everything was all green. We were all friends all the way to the end of June, right? We were happy-go-lucky and things were great. We're watching Barney. So, but when July started, do you know what happened? We reset. Suddenly, people don't know each other. Everybody starts a new, fresh, no more body count, all right? And so when we started July, everything refreshed, which means that we had a new month, new quarter, new week, and new day. All right. So when we started that, we flipped from all the way green to all the way red, right? And even though this ran for so much, because the momentum is all red now, we're saying blood, right? And we're seeing a lot of blood, a lot of red, where it can fall for as long as we continue and staying the same color and staying the same direction. Because you see on these candles, not only are we red, we're also pushing down further, breaking a previous low, pushing down further, breaking a previous low, right? So those are, but when we have some inconsistency, in this case, this is showing incorrectly, so don't mind that too much. Just because we're in replay mode. But if we have inconsistency where at a certain point, the day starts turning green, the weeks is red, but the month and quarter and whatnot are red, this is where things may be a little less obvious about where the price is going to go, right? But that's important to know. And so at this point, now fast forward to today, where Carnival had a trade set up, a hammer, which we know is pretty bullish, and we crossed back above where the month was, and we started the week green. Everything's back green, which means that we're going to have a higher probability move towards the direction that everyone is in agreement with, that all of these time frames are in agreement with. You wonder how this looks on the R volume? Here it seems like the volume's increasing, steadily increasing as it started going up. And when we did cross above the monthly, you see we did have some volume spike. And that the volume was pretty higher than usual because, you know, we have more buyers. All the buyers or the market participants are in agreement about where this should go. Were those silly analogies helpful for those who didn't understand time frame continuity before? So let's look at something that had some bad time frame continuity. So let me see. I think this period during Roku was pretty bad. So you see this had let me just fast forward. So this had a red day but a green week. So it's like, okay, the day is bearish, but the week is bullish, and the month is bullish, but the quarter's bearish, the yearly's bearish. Typically, the higher time frames take more priority. So if you think the bigger the time frame, the bigger the importance, the bigger the impact, right? Most of the time. And so this is a bit conflicting. Where is the stock going if you saw this? Oh, so many green days. Meanwhile, everything else was red. But the stock's not going anywhere. The day, it can only take you so far. But if all of the bigger time frames are red, then that still means that on from a bigger perspective, the stock was still bearish, right? And you can see that once we did get more, and that we once all of this stuff where we had inconsistent time frames, and that leads to consolidation, which we don't like because options can get very much hurt by sideways movement. But once we got back to agreement and we start throwing up signs and everyone's all linked up, that's when things go in a proper direction. Okay. A ticker that went so crazy because its time frame continuity was just chef's kiss, mwah, right? This ticker right here, Caterpillar, where from last Friday we got above the monthly open, then everything turned green, and then you see how fast this turned up, right? It started off slow, got faster because more people are just seeing this in alignment, and that buyers have more control than sellers, and that we just keep it going, and you will see longer, more probable trades, higher percentage trades when your time frames are in alignment. Okay, so if you've seen some stocks lately just go ballistic, especially like SPY, for a long time, SPY has just non-stop been printing ever since June because it keeps going up. A new high, new green. Okay, it's all in alignment. Okay, let's go to the next week. Okay, we're still green. We're still making new highs. That means that we're still bullish in that direction. This is confirming the trend, confirming the momentum of the stock. All right. I'm probably going to end there on time frame continuity so I just don't become a broken record. But I hope that I really zeroed down the importance of this indicator and how it can lead to higher probability trades for you. You know, one thing I would say that would seal the deal in the mind for some people is that this is my RSI, right? What do I mean by that? I prefer this and using this to determine stock's momentum than using RSI as my baseline, okay? And that's just my preference personally, right? But this is what confirms for me how long things can just continue to go up or just go in a certain way or whatever. And also by better identifying when things start to get choppy and move sideways. You see on SPY, at this point, sometimes we were still in green, but things just switch back and forth. So I think I had dropped this indicator earlier in the chat. I did. So if you just scroll up in the chat, the indicator is there. Okay. How would we rate this one out of 10? And of course, I have my own indicator that I made that makes it a bit more clear. But that at the moment is just in the lab under construction. Because TradingView changed some things about their code and it's driving me up a wall. Time frame continuity. And so now this one's a bit more advanced, okay? But it doesn't have to be. But this is part of a trading system, all right? So this indicator is called Smart Money Concepts. This one is by Lux Algo. And so this one is a bit similar to the pivot level indicator that I showed earlier. This is similar because it's used to help identify when price action is in a trend or when it's changing a trend. Okay? And so what we can do, and it's going to take a little bit of explaining, and I'm not going to be able to explain everything, but I have a little bit of a video that can give a good sort of rundown about what some of this stuff is. What's an indicator? So what I'll do to pull it up, if I search Smart Money concepts. It's this one that is by Lux Algo. I can even search SMC, and this one will pop up too. You see, this one is popular. This has 42,000 favorites, or 42,000 downloads. Okay. So when I click on that, all right. So this is on SPY. Okay. So I'm gonna try my best to help to make this make as much sense as it can, especially to people who are just starting. So, there's two things that are typically labeled on here. There's one thing that you can see that is the blue highlighted area. Those are called order blocks. The blue order blocks are typically points of support. Okay, I won't go into exactly what they are and how to draw them, but this indicator shows you relative areas of support based on the chart formation. Okay, and so with that, there's something that is very tiny that is probably hard for some people to read there, but it says BOS, right? A BOS, that means a break of structure. So what all of this stuff is telling you, structure is simply telling you about what is the current trend. Is the current trend up or is it down? Do we have higher highs and higher lows? Are we changing the trend? Or do we have lower highs and lower lows, which is a downtrend, right? When we have a break of structure, that means that we, at least in this case, if we see here, that we are attempting to make a new high above a previous high, and typically after making a higher low than before as well, right? And this indicator is showcasing that for us to understand. So when we see a BOS up, typically that means a continuation of the trend in that direction. So we saw that that was green. Later on, what eventually happened as SPY came down, we have this that says it looks like Chach. If you look and zoom in pretty carefully, it looks like Chach is what it's saying. And Chach, that stands for change of character. Some people think about this as a market structure shift. Don't get caught up in these words. But all that means is that there may be a potential change in the trend, right? Because eventually we made newer highs, right? Continue the trend. But then we started making lower highs. So much so that the price came down and broke a previous low, right? So this Chach, the change of character, that is alerting us, hey, we may start making lows and lower lows to say that we're in a downtrend. Because first, we're like this, right? Price is moving up like this. I just drew that on the chart to illustrate it for you all, right? And so when a stock comes down and it starts seeming like a downtrend, this is telling you, oh, we may be forming a long-term downtrend. This is like that first signal of it. The confirmation that we are now in a downtrend is if there was a break of structure red. Does that make sense? I know this is not going to click for everybody immediately, but this is introducing this to you. And this could take you a long way, by the way. But this is what the indicator is telling you, essentially. Okay. That the Chach, we may be starting a new trend to the other direction. Let's see if SPY did that. It did just break, and we did dump, right? But what happened here? The other part of the indicator, right? This blue area, that support, we ended up bouncing off of that. We created this low, right? But essentially, what SPY ended up doing is that it didn't make a lower low after this. After we had the moment where we broke below, and then finally we made a bounce, what would have been the trend change for SPY to really get selly and just get destroyed? Is that if after we had the Chach and we attempted the trend change, the real confirmation is if we dumped like this and made a lower low lower than this. This is going to click for some people, but not everybody. But this is your introduction to understanding the trend and understanding market structure, okay? And this is what the indicator is showing you. But because we did not make a lower low after this, and that we bounced off of this support level, that told us that we were still in an uptrend, like so, right? And what happened after we just rose all the way back up? We have another Chach, because this one is now running counter to that bearish one. So like, okay, we're going to try to flip this back around and confirm back to the upside that we're bullish. And what did we do? We formed a high over here. I hope that's good enough, and I hope the indicator showcases what I'm trying to prove. We made a high after trying to change back to an uptrend. Do we get a confirmation of the uptrend eventually? We do! Oh, I'm excited, right? And now this BOS, the break of structure, that's the confirmation that now we are cooking. And we are now in an uptrend, and we're not in that long-term downtrend that was being shown before, you know? Now we're confirmed an uptrend. As long as we continue to keep making higher highs and higher lows, we're just gonna keep printing and printing and printing. And that's what's being shown there, family, right? That's what the indicator is telling you and simplifying for you about what trend are we in. And it helps with understanding, like, how long are we going to continue in the same direction. So in a way, it's similar to time frame continuity in logic, right? But it's it's a different, I don't know what I would say. It's a different system, right? It's because this is a different understanding about how price is aggregating. Not to make that too complicated or so. While time frame continuity is telling you the momentum, this is telling you the trend. Time frame continuity is telling you the momentum of a given trend. Okay? This is great for swing trading. Yes, Landa. This indicator is actually great for all types of trading. Most people use it for day trading because a lot of the smart money concepts people, they look for very specific scenarios to trade futures like the S&P 500 or the NASDAQ. They look for very specific time frames, and they use this strategy to trade that, right? But I love using it on swinging. Oh my god, it's the best thing, right? Because in a way, I was trying to see, man, just a lot of things went crazy with understanding that. Like Roku, look at Roku. Ignore all of this red and blue. I mean, you don't ignore it, right? But sometimes it can definitely populate the chart a bit too much, more than I would want it, because it still is important, because this is just showing you that these are resistance areas. But the fact of the matter is that Roku had the Chach green and is now having a break of structure, which is confirming the uptrend. It's been sort of very green, and at times you want to take trades before the confirmation even happens. But that's kind of what we're seeing here, okay? There are several in-depth videos on this. I'm going to try to find a good one. But there's typically a YouTuber named Teach, or not Teach Trade. His name is T Trades, not to be confused with Teach Trade, aka us.
Now let me show you an easy smart money trading strategy using 2 indicators. First, add the buy side and sell side liquidity indicator, then the smart money concepts indicator, both by LuxAlgo. For this strategy, look for price to break sell side liquidity as highlighted with a red box. Then, at the same time, look for a bounce on an order block, which is highlighted with a blue box. To enter, wait for price to regain sell-side liquidity. Then, you are going to take profit at buy-side liquidity as marked with green lines. If you want to hold the trade longer, look to take profit at the next upside order block. It's that simple.
So this is video, you know, this is one way in terms of like you can use the indicator. Again, not everyone will understand some of the terms being used here, but it's like a simple breakdown of like, hey, if you're a type of person who needs like something like, okay, do this, then that, and then I'm sold, right? I need to be walked through every single thing. Like this is a possible video that kind of covers that. But what it's basically saying is that when it uses the word liquidity, it's saying to tell people to wait for a stock to hit a previous low first, and then wait for the reversal. So it's saying to hit support, after a stock hits support and then reverses at a specific support level, that using the indicator, it's pointing out where that support level is, and that's where your buy entry can be. And then to take that up to where the resistance levels are.
Want to hold the trade longer, look to take profit at the next upside order block.
So that's essentially what they're detailing in that video. And I can copy this video and I'm gonna drop that as well. But we're not gonna hyper focus on that too much. But it's just more cool stuff, right? The more you know, the better. I'm trying to get rid of this. Okay. And so now I think this might be the second to last, and then the last one, of course, we're gonna go over some of our offerings. With volume profile now, volume profile is an indicator that displays volume at different price levels. Okay, this is one more swing trading indicator. That previous one, as well as time frame continuity, those were absolutely awesome for swing trading. Get those if you want to swing trade more often, and if you want to have more instruction or understanding about how they work. Volume profile is very useful for swing trading. Essentially what this does is that this shows volume in a different way, right? But showing you at the average price that volume is at each the average amount of volume at each price level. I want to describe it as that. The average volume at each price level. Okay. When there's a lot of volume at certain price levels, that means that typically buyers and sellers are in agreement, right? That there's so many transactions happening at these areas and that no one has control. Like the buyers don't have control nor the sellers. So a lot of times in those high volume areas, you can start to see price to consolidate. If you see that at the very bottom here on the screen. But and so in that regard, that can kind of be either consolidation area or support or resistance. If price breaks out of those higher volume areas, so like out of here, we like to see when we break out of this area and then that price starts moving into where it's low, where you see this, like, it looks like what would you call that? Like a valley, right? It's I'm running out of words today. But when we see this giant, like this lower volume area and we break through there, what's going to happen? We just smoothly set sail. We just go. Because we can go from one area of high volume and then just go all the way past all this low volume, all the way to where the next high volume area is. So that might be where resistance is on this stock. Okay. I'm going to drop all the links to each indicator at the end. Don't worry. But everyone sees this? Do you see what's being illustrated here on the chart? Oh my God. Some things are annoying me. So what I'm going to do, I'm going to take these indicators off again. So the one I like the most is called, if you search volume profile, the one I like the most is by KV for coins. Okay. And so if I put this on here, right? In a way, this is Roku. In a way, Roku, I don't want to, let me just remove that. For Roku, we've been in a high volume area for a really long time, right? And you see, like, if the volume starts covering up the candles, that typically is like, man, like, is really high, you know? But now, in a moment here, Roku's trying to break past this high volume area. And so look what happens if it breaks out of this area of high volume where it's super consolidated, right? If we break out, this whole swoop of the decreasing volume, Roku can just literally get some crazy poppage action like that, right? Where we break out and it just starts running. Some additional information is that there's loads of gaps to fill on Roku. It's gotten very, very clapped. But that's kind of the information we would use here by using this volume profile indicator that's right there. If you see here on the chart, there's this orange line. This orange line is called the point of control, or POC. This is the point of control is the level of the highest volume in a period of time. And look at that, everybody. You can see around that orange line is where there was a lot of wicks on the candles. Everyone sees that? Where we're kind of dancing around this level. We bounce off of it, bounce, bounce. Eventually break, and then we reverse, 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 right? And so around there, we get a bit just resistance or just choppy, right? But if we move away, that's when price starts moving aggressively. It happened to the downside, right? Outside of that area, price was moving super high to the upside. But around here, we're getting a little consolidated. So if Roku then breaks away from that, we can start seeing things to fly, right? Make sense, everyone? Beautiful example again right here. Look what happened. This is Caterpillar. I'm putting cat because I think a lot of us saw how crazy this move was, right? That this, some people got like 500, 1,000% on cat this past week or past 2 weeks. And what was happening? Well, it was trading along a point of control. Highest volume shelf, because there's just so many transactions between buyers and sellers happening at this level and no one has control. But if we break out of there and break into this low volume area, that the price action can just go from one point A, straight to point B, where the next volume shelves are, or back to, you know, what we know as the previous highs and resistance, right? I'm not sure if volume shelf exists on Webull. Most of these indicators are available on Thinkorswim, but most of it, and a lot of these can be TradingView exclusive, because TradingView is just the best trading platform, period. There's the best charting platform, right? There is nothing better. Thinkorswim had its chance, but it's over, bruh. It's all about TradingView. Because there's just so many custom-made ones. You know, what is meant by volume shelf? You see, Gemini, do you see these little peak areas that are coming out like this? Do you see that? I could make the indicator maybe a bit brighter. Hopefully everyone's been able to see. So these are called the shelves, right? And these are just the prices on the chart. So this area where the orange line is, that price is 327.25. You see that? 327.25. So at that price level, that is where there's a lot of volume on this shelf. And that, in a way, is where so many transactions have happened at this level. So many orders have been submitted between both buyers and sellers. And so that makes the price a bit consolidating, right? Because price the buyers and sellers are in agreement on the price at this level. No one has control. In these lower volume areas, it's less of that you know, abundance of indecision, right? If we break out of these areas, that leads us to these other points of where, you know, some of that volume is situated. In Caterpillar's case, we kind of just flew by everything because the breakout was just so strong. But that's what's being illustrated there on the chart. What else flew egregiously recently? Zillow. Zillow was moving fine for a while, but you see every single time we see this orange line, that's kind of where price is kind of consolidating or getting ready for an expansion. But once we move out of this area, we move to the next one. It seems like it was consolidating again. But once we broke out, I love this for swing trading just because you're able to see just how much space this can move without any of the BS, right? Because we don't like when things stop and go and it's like You have a green day and it's like, yay, and then it gaps down the next day and it starts consolidating and you're just like, oh my god, dude, just give me back-to-back green candles. That's what I want. And so if you want back-to-back green candles, especially on the daily or weekly time frame, this is for you, so that you can swing for longer periods of time and just gauge the momentum for how far something can go. All right, I know I have a lot of energy today, but this is really demonstrating the power of everything that we are covering here, as these are some of the best indicators out there. And there's more, but we won't be able to get to everything today, right? These are only the ones that I felt were most useful to highlight and to explain the use cases. All right, so this tells us when there are great swing opportunities and then areas of high importance on the chart. Price moves smoother through the low volume shelf areas. What do we give this indicator? How are we feeling? Are things that are clicking? What number are we giving out of 10? How this is making us feel? As always, this can be used in combination. Like, we're highlighting each individual indicator, but of course, all of these can be used in combination with each other as well. So imagine using the volume profile when you're looking at a swing trade, but then you want to have the momentum of the swing trade down to make sure that it is making sense. So the time frame continuity indicator is going to tell you, hey, this is continuously still having momentum in that direction to fulfill that swing trade from point A to point B, right? So that's kind of one example of how a combination of such is, right? So hopefully these are sort of turning some cogwheels in people's minds. And then finally, of course, our trading tools, right? For those who have been using them and for those who haven't been initiated yet, that these are the tools that we've built that are helpful for, utilization in your everyday trading day. So with all the ones I've covered, most of the indicators that I personally use nowadays have been the ones that I developed, and one of the ones that people had a lot of use for was the sand and clouds, which I don't know if Molly Mall Jamal is here, if he wanted to speak a little bit, because there were some updates recently. But we built these with the intention of making things, at least, of course, AutoStratic is very much built to generate the trade ideas, so you don't have to spend too many steps with finding the actual options contracts, as well as having an understanding about how probable a trade setup is with a strat score. So like all of this has been developed. This has been now 1.5 years in development, and that's through these updates that we've been giving out and pushing out. And so we're continuously making updates to these tools with AutoStratic that generates the trade ideas. The range rush reversal, put RRR if you use the range rush reversal here. A lot of people have also downloaded the intraday trend algo. That one is pretty cool. So that measures, we've talked a lot about like intraday, or excuse me, we've talked a lot about momentum. But the intraday, I'm gonna remove these drawings. The intraday indicator is kind of useful for like during the trading day, just to see like, are we currently bullish intraday? Are we currently bearish? I'm trying to find that right now. Am I losing my eyesight? What the heck? Do I not have it? What happened to my indicator? Okay. Well, I do have it. I just may have to find a different chart.
It should be an invite only.
Oh, you're right. But when I searched it, that was weird. I'm pretty sure I have it. Oh, okay. Here we go. That was very weird. When I searched it, it didn't come up. But so the intraday trend algo. So we have this because it tells you like how a stock is doing on the intraday, whether um during the trading day if we're currently bullish or bearish. So if we're above the middle trend line, we're typically bullish. But the cloud tells you what the overall momentum is between buyers and sellers. So at the beginning, there were still some sellers in here for Zillow. But at a certain point, we stayed above there and we had a bit of this red area, and that's typically a bullish momentum signal. You could use that as a buy signal. You could use that for your entry. It's not going to guarantee you a win every time, but it's more so to just a confirmation that, hey, we are now bullish. That's what the arrow means. And so you can see that since then, from that level, kind of Zillow continued up. When we sort of fall back into this cloud, it kind of goes dark gray. That means that we're losing buy momentum and selling momentum may be increasing. But if we stay above there, we can still maintain the buy momentum, so on and so forth. So oftentimes, let's say that if this here gives me confirmation to go long and buy some calls, typically you could use it to say, hey, it's going to go up. And as long as we stay above the cloud and stay green, that this is still a call. But if we fall back into the cloud, that might be a point where I take some profit. So like all up in here, that those might be some profit taking areas. And so that's kind of a very simple demonstration of the intraday trend. Of course, we have the range rush reversal, which it more situated tells you where an entry can be. And in this case, the moment we broke above where it says or breakout back here, and that we broke above that red area, that was an entry for calls, right? And it told us that. And so this is very useful for day trading. Both of these are day trading only. And those are our free indicators. So the free indicators are for day trading only. Our paid are for also day trading, but very much super awesome for swing trading. And so Molly Mall, if you had anything you wanted to share about the sand and clouds, and then we'll probably close this out. Jamal.
I'm sorry. I was eating. Yo. Um, excuse me. I'm sorry. I was a little bit too hot coming in. But the Santa Claus is it's like an all-in-one type of indicator. I tried to put as many use cases in it as possible. But the main thing that I like to about is the ATR part of the indicator, and I kind of went over it when we did the last session on back testing. But it kind of gives me like levels of strike levels that I could potentially look at. So if I first of all, if I see something that comes up on the radar, so I see something that has, an inside candle, for example. I'm looking at Enphase right now. Um, oh, I can't share my screen, but I'm looking at Enphase right now. And so on Enphase, if I was looking to actually get in once there was a trigger for calls, then the part of the I'm sorry, the sanding clouds that I like is the ATR. And so it actually plots the ATR on your actual chart, and it actually gives you the levels as well. So it's like I can go now and I can see it visually on the chart where the strike price is or where price can potentially go based upon the ATR that is set. And so the cool thing about this is that it's customizable. So if you're looking for a month out, you can set the ATR to that. Even if you're looking at contracts that, have maybe 17 days left on them. So if you're looking at August 2nd contracts, you can actually see, you can put it in there. Okay, there's 17 days left until August 2nd. You can put set the ATR to 17, and it'll give you an idea of where price action can be within the next 17 days. So that's one of the main things that I like about the sanding clouds. And then there's the sanding clouds themselves that kind of just act as momentum and trend indicators. So it's basically like EMA crossovers. I think we went over it in the chat earlier today, but it's just basically telling you about EMA crossovers. So what I like about EMA crossovers is when the slow EMA crosses over the fast EMA, that's a death cross. So it's basically like a downtrend. You think of death falling down. So that's kind of basically an indication of a trend change to the downside. And when you see things like this on a strong but powerful time frame like the day, I typically like to use the day, it could mean that prices figuring out that it may downtrend for a while. So it's good for me when I'm trying to get into swing trades and I see that there's been a death cross, or in this case, it could be a golden cross. That's when the fast EMA crosses over top of the slow EMA. And so that's indication that price could trend up for a while, especially when you see these on fast and powerful time frames like the day, which I kind of like to use when I'm swing trading. I wish I could actually show you, but that's in general one of the main two use cases of the sanding clouds. It also has the open, high, low, and close, which are all levels that are significant. You want to know your opens, you want to know your highs, you want to know your lows, and you want to know where price closes. And the good thing about that is it's not just set to, okay, only on the day or only on the week or only on the week where you get those levels. You can actually customize it to show whatever time frame you have in that you've compiled in TradingView. So, example, if you wanted the 12-month open, high, low, and close, you could get that. If you wanted the 6-month or the 4-week or the 3-week, 2-week, the 90-minute, the 15-minute, the 1 minute, the 36-minute, whatever time frames you have in your actual TradingView, it'll depict that. And then the other cool thing about that is that it won't just show the most recent candle, it'll show however many look back candles that you want to look back. So if I put in the settings, if I wanted to look 0, then that'll show you the most recent candle. If you want to look back 1, then it'll show you the second most recent candle. So for example, if I'm looking at the day and I wanted to see yesterday's open, high, low, close, and I'll set the look back to 1, and it'll have that on my chart. No matter what ticker I go to, it'll show me uh, the previous days open, high, low, and close. And that's the same thing for the 50% retracement. So it also shows you 50% retracements, and those are, customizable to whatever time frame you want, as well as whatever look back period you want too. So if you wanted to see the 50% retracement for 5 candles ago, then you could do that. Or if you just wanted to see the 50% retracement for the previous candle or the current candle, it'll show you. So it's just all types of things. I tried to put it all into one so that you don't have to use as many spaces in TradingView. I know some people don't have a subscription, so they just want as much features from one indicator as possible. So I try to get that. And then for other people who also don't care about the spaces and they have a paid subscription to TradingView, I also separated things out. So it's uh, open, high, low, close indicator. It's an ATR indicator. It's a sanding clouds indicator. So if you wanted to just use one part or one feature of the package, then you have that option also. And that was my whole spiel. I wish I could show you guys, but there'll be videos and whatnot. Actually, well, yeah, there'll be videos and whatnot. The instruction manual for it is actually in the instructions channel. So if anybody was, more curious about it, if you haven't already tested it, you could go in there and see more details about what I'm talking about. And then this will actually be released very, very soon. Just getting everything together as far as the website, and just trying to make things as simple and as cheap as possible for everyone. I'm not trying to, break anybody's pockets or anything like that. and that's it.
All right, everyone. We feeling all good? And now the final rating about how today's lesson went. Give that number out of 10. We hope that this was helpful and that this was useful and that this provides some insight and clarification on some indicators you may have not known before, or some of the ones that you did but didn't know all of the use cases. Thank you all, everyone, for joining tonight. It's been a pleasure, as always. We're going to continue with our free lessons next week and keep continuing on our 30-day challenge. Let's keep the accountability and keep at it and growing our portfolio and becoming more accountable, journaling our trades, doing more, and that's going to lead us to better outcomes. And we're here to support you through all of that as well.